A double whammy for European natural gas prices. They are up more than 50% since Tuesday after Russia cut its supply to Germany. And U.S. exports are set to drop after a major export facility in Texas was knocked offline by a fire. Joining us right now is Energy Aspects analyst Leon Izbicki. And Leon, we talked earlier this week about the fire in the Texas facility that's going to keep us from exporting natural gas to our European partners and allies. What happened with Russia shutting off the pipes here?
Well, I mean, it's just really compounding the tightness that we're seeing on the European market. We're already losing around 6 billion cubic meters of LNG imports, probably from the outage at Freeport LNG. And if we're now looking at the significant cut in Russian flows that we're seeing with Nord Stream 1 really operating at only around 40% of capacity, that's just driving up prices because the market is trying to balance by just destroying industrial demand in Europe in order to liberate gas volumes to put them into storage.
What does this mean for further down the road? I mean, watching their gas prices soar, what's going to happen if this is not fixed, if there's not some solution between now and the winter months when it really has an impact on consumers in Europe and the prices they'll be paying just to heat themselves?
I mean, it just amplifies the pressure on European policymakers and on the European economy as a whole. We are looking at a situation in which there's probably going to be a flow constraint more or longer than just after the Nord Stream 1 maintenance ends in July, simply because this compressor issue that Russia and Gazprom cites is a relatively thinly veiled pretext for a clearly politically motivated decision to cut flows to Europe in order to actually prevent Europe to achieve an adequate storage target at end October. And this means that Europe is just going to be more dependent on Russian flows over winter to actually try and balance and to ensure that end consumers in particular are actually still receiving enough gas to heat their homes.
Very quickly, what about the United States? Because I'm hearing the policymakers here are now considering cutting our exports so that we make it more affordable for U.S. consumers and businesses. But aren't we supposed to be allies helping out? And if we do that, what are the political implications?
Well, I think, I mean, from a market perspective, any LNG volumes that we are losing from the U.S. because of any politically mandated cut to those exports is just going to drive up European prices further to the point where ultimately, even now, rationing is a real possibility for the European market. It is really the only way for the European market to balance if we are going to see more supply cuts coming either from the LNG market or from the Russian pipeline flows. So fundamentally, it's just going to cause a rift between Europeans and Americans, precisely because it's supposed to be an alliance. Also, when it comes to an energy partnership and to actually try and get Europe to wean itself off of Russian gas, which would just be a huge setback for the European market.
Shepard Smith here. Thanks for watching CNBC on YouTube.